Hello and welcome to Indian Standard Time. I'm Siddharth Varadarajan and my guest today is Professor Ben Shenglin. You are the Dean of the Institute for Academy of Internet Finance. It's an unusual area for study at Zhejiang University, and you are also the Executive Director of the International Monetary Institute at Renmin University in China. Welcome to Rajya Sabha TV.
Thank you very much, Siddharth.
Professor Ben, we are meeting at a time when there is an increasing perception worldwide that China, which was once the powerhouse of the world economy, is perhaps beginning to slow down slightly. Chinese growth rates are still impressive, but they remain a far cry from what we saw 3 or 5 years ago, let alone a decade back. How true is this perception that Chinese growth rates are beginning to slow down somewhat? And if this is true, what to your mind are the main reasons for this?
Thank you very much, first of all, for having me. And it's true to a certain extent that the Chinese economy is slowing down, But let's put this in perspective, Over the last 37 years since China opened up to the rest of the world, Chinese economy has been reported to be growing on an annual basis about 9% roughly a year. And now, given that we have a much larger base, we're talking about a bit over $10 trillion GDP size. So even it's 7% or 6%, it's still enormous growth. Just do a rough calculation. If we're talking about 7% a year, each year the incremental part of the Chinese economy will be equivalent to the size of Turkish economy, which is the number 17th in the world. So it is natural after such a long period of growth, the economy needs to adjust to a slower, but as you say, still relatively impressive growth rate. 6.5 or 7%, it's a very good growth rate for a large economy like China.
But is this a new steady state, or do you think, in other words, is it the product of a long-term secular process that you describe, or are there short-term factors that are also pulling the growth rate down?
The short-term, certainly, there are, for example, the globally, the European economy is not doing too well, so the export side is not growing as much. They are not contributing that much to the GDP growth in China. And in the meantime, given the new thinking behind the economic strategy in China, in current leadership, they want to focus on the quality of the growth instead of just the pure quantity. So to that extent, the government has not actually put so much emphasis, first of all, on the GDP target, growth target. Secondly, the government has not actually used up its fiscal, stimulus tools. We have plenty of tools to do that, but we have chosen not to.
Right. So this is the new emphasis, you say, of the Chinese leadership, that focus on internal balancing, internal growth, internal demand, rather than an equality, rather than extensive growth the way it was in the past?
Indeed. The thing is that, after, as I said, after so many years of, really super high growth rate, the economy has been running under some tensions, and we need to make sure that we reprioritize instead of just purely focus on the so-called GDP growth, sometimes with as the price of costing in terms of environmental degeneration and other things. So I think it is a time for us to reprioritize and rebalance the key objective for the leadership.
But hasn't this been a priority in China for some time? I mean, I recall even during Hu Jintao's time, this focus on so-called harmonious development, this idea that perhaps what China had done in the past had led to imbalances or disharmony that had to be addressed. So is this a continuation of that process or something that's qualitatively new?
It's a continuation of that policy to, as you said, to focus on the quality of growth. But because of the momentum in the previous generations of leadership, so it was a bit difficult to ask the whole country and the various government officials across the country to adhere to this a new concept. So that's why the current leadership, they have come up with a very popular phrase called new normal. That means the new reality, new environment, but also new goals and new quality of our growth target.
Now you've worked in the private sector. You were in the private banking field, JP Morgan, for example, and you must have encountered in that avatar of yours, and also in your interaction with foreign governments and foreign bankers, a sense that the Chinese economy and Chinese policy making has been less than transparent. There's a certain opacity that comes with government ownership and government control. We've heard these complaints in the past about protectionism and so on and so forth, but in recent years, this debate has reflected a growing concern about the state of the Chinese financial sector, and in particular the banking sector. Do you share this sense that banking reform and greater transparency is a task that the Chinese authorities have to pursue now with greater vigor than they've ever done in the past? In other words, that China may be looking at a banking crisis of sorts if it does not address the need for greater transparency, perhaps better prudential management of bank balance sheets. Are these concerns of the current Chinese leadership?
These are the concerns, obviously, but in the meantime, we need to put things in perspective. Chinese banks, they are largely all listed vehicles now. Okay, they are listed either in Hong Kong or in Shanghai. They are actually adhere to pretty good level in the disclosure standards. And are they perfect? No. But over the last 10 years, they have come a long way. They have made a lot of progress in terms of corporate governance, in terms of disclosure, and in terms of credit culture and so on and so forth. And also, let's bear in mind that the Chinese banks, given the unique financial system in China, banks have been playing a much bigger role than in many other countries. For example, we have a banking sector which is like nearly 3 times in terms of asset size of the Chinese GDP. And that is probably the largest banking sector in the world. Okay? And compared to, like, say, securities in the industry or insurance sector, banking sector is huge. And they have been playing a very important role in many ways in supporting the government agenda, in supporting the private initiative as well. But along the way, they have made a lot of progress, but they also facing a lot of challenges, especially when the economy is slowing down a little bit. Okay?
I mean, in particular, there are concerns about the bank balance sheets being squeezed, profit margins, as well as the mounting concern over bad loans, what in India we call non-performing assets, which are a huge problem with many of our public sector banks. To what extent is this a problem, that the Chinese banks may have extended loans that are not easily recoverable?
Well, the listed banks have all reported their basically so-called what we call NPL ratio, non-performing loan ratio, or NPA ratio, and they are generally pretty actually healthy. Okay? You could argue whether the reported figure is really according to so-called international standard. But in the meantime, what is you could also argue what is the international standard. The good thing for all the Chinese banks is that despite all the challenges they have been facing, by and large, the NPA ratio is very actually strong, very, very healthy. They are within 2%.
But growing.
They're growing a bit, but it's from a relatively low base in the first place. Yes. Secondly, their own provision, that means their own reserve, is huge. So there is a good cushion for them.
So capital adequacy is fully Basel III compliant?
It is. Well, we have not. We have been in a process of introducing and implementing the Basel III. Okay. But in general, the Chinese banks are among the healthiest in terms of overall capital adequacy ratio. Yeah.
And banking regulation. I mean, we saw even in a well-developed capitalist economy like the United States, the complete failure of banking oversight and regulation, which led to the 2008 financial crisis. Is there a possibility that things are happening in the financial sector or in the banking sector that Chinese regulators are perhaps not aware of, and that may lead to trigger a crisis, a Bear Stearns kind of moment for China? Is that a danger?
you cannot rule out anything in this world, I suppose. But in the meantime, I personally believe that's not a really major concern for us. The reason is because the Chinese financial sector has been, to a certain extent, heavily regulated. The kind of products and that they can get into have been limited to a really plain vanilla stuff.
Right.
So it would be unthinkable that the Chinese bank have been able to, engineering some of the so-called off-balance sheet, structured notes that have put in U.S. banks into the trouble. So to that extent, I think given the simple products they have been doing, and the clients they have been serving, I think they have been generally on the conservative side. There were some talk about local government debt concern that they say the Chinese banking sector have been putting too much loans into the local government vehicles.
Right.
But considering the overall fiscal position in the Chinese government sector and the unique political system in China, that means the local government is largely incorporated under the central government system. Right. So it's not like a federation.
Right.
So I don't see that as a concern. Okay.
Right.
Yeah. Plus, the capital account is not is fully open. Okay.
Right, exactly.
So that helps as well. Okay.
Now, one of the initiatives, just turning now to the international, dynamics of China and China's interaction with the Asian region and the rest of the world. One of the initiatives that we associate with President Xi Jinping and the current Chinese leadership is the One Belt, One Road initiative, which has excited many people in Asia. It has also given rise to misgivings, concerns among analysts about the strategic purpose behind this. But let's look first at the economic dimension. What are the prime economic drivers for the One Belt, One Road initiative? Is it that China has surplus capital that it wants to deploy, earn some kind of a rate of return because this stuff is just sitting idle? Tell us something about the economic motivation or drivers behind One Belt, One Road.
Okay, certainly you're right. I mean, the surplus capital is a reason, is a motivation. Last year, for example, 2014 was the first year China was, investing more money overseas from a foreign direct investment perspective than China was receiving the inbound FDI.
This is the first time it happened?
First time
okay.
in history.
So what was the ratio roughly?
The ratio was actually last year we invested outbound, so-called, $140 billion US. Okay. And the inbound was around probably 10 billion. Okay. So the first time in history. And it was actually, nobody was actually expecting that. So to that extent, the last 10 years, Chinese companies have been gradually investing overseas, but not at a pace that we actually originally thought it would take another 10 years before China would reach that stage. So there is a good level, the surplus capital, as you said. And secondly, obviously the domestic market in many ways, in terms of investment opportunities, is a bit limited now. Okay, given there are still a lot of investment opportunities domestically in China, but in the meantime, given, as you and I discussed earlier, the Chinese economy is slowing down a little bit. But more importantly, I would argue that One Belt and One Road strategy, the economic rationale is that we believe after 36 years of unprecedented growth, we have learned many lessons. We have probably gained some experience, and we feel to a certain extent that as a so-called a developing country, we probably have something to offer to other developing countries. Maybe we don't have to listen to the so-called conventional development theories that you got to have full liberalization capital accounts to start with. So to like that's also a motivation.
And how does the One Belt, One Road initiative intersect with the other exciting project of the Chinese government, which is the founding of the AIIB, the Asian Infrastructure Investment Bank? Is there a clear connection between the two? In other words, the AIIB will be the vehicle to push projects under the One Belt, One Road, or is there a wider agenda?
I think there's probably they're related, certainly, AIIB and One Belt and One Road. And if you have to consider the One Belt and One Road is the overall strategy and overall initiative for China
to create connectivity around Asia.
Around Asia, but also probably go beyond Asia, because the One Belt and One Road strategy, from Chinese perspective, you can probably from a Western perspective, it's better, easier to be understood as so-called New Silk Road initiative. We have done some calculation that the so-called One Belt and One Road initiative would involve not just China and the rest of Asia, but also along the way to Europe, to Germany, ultimately probably to Africa. So it's much broader. So AIIB is one of the, either you call it pillars or initiatives support the broader One Belt and One Road strategy. Okay. Yeah.
As a finance expert, were you surprised at the excitement and interest that countries around the world have shown towards the AIIB? US allies like Britain ignored Washington's démarche and signed up before the deadline. Is that something that took you by surprise?
I wasn't aware until it was announced, to be honest, but certainly I was surprised, and the general public was surprised. But I thought the UK was very pragmatic. It was a smart move from their perspective. Right. They have gained probably maximum leverage with China. You know. Right. And the good thing is also, to a certain extent, is that because the initiative, has gained so-called, attraction and momentum, and it's not just for the self-interest of China. We, as I mentioned earlier, we want to share the access to capital. We want to share some of the, best practices. We want to actually invest. We want to trade more with, the nations around us, but also, across the globe. So, and that has been, the key, I would say, cornerstone of the overall strategy.
China has been one of those countries like India, like Brazil, like Russia, which have complained about the unrepresentative character of the Bretton Woods institutions. If you recall, right after the 2008 financial crisis, when, in a sense, the OECD countries were forced to work more closely with China, but also with India, with Brazil, through the G20, to rescue the world economy and the world financial system. And so there was greater momentum imparted to the demand for more balanced representation in the World Bank and IMF. That representation never came. Promises were made, but I don't think the US and Europe ever intended perhaps to deliver. So clearly the AIIB is a product of Chinese, shall we say, impatience or frustration with the US and Europe refusing to democratize the international financial system. My question is this: to what extent then would the Chinese be prepared to create a governance structure for the AIIB that is more open and more representative of current global reality than the Bretton Woods institutions? We don't know too much right now about the governance structure. So to what extent would AIIB reflect that new reality in the world?
Well, first of all, it's in China's best interest to create something that is robust, that is democratic, that is considered by the wider, international community, as an institution with the highest, say, corporate governance standards, and also, the right focus. The reason is because, we also have, the, other, initiatives, as you probably are aware, the New Development Initiative together with India.
Yes, I'll come to that in a second.
Okay?
Yes, yeah.
So, like AIIB now, as you know, we have about 57 now, so-called like founding members. Okay? And the membership isn't really limited to China or India or Asian neighbors. As you mentioned, UK, some of the European Union countries. So those who want to participate in the Asian infrastructure investment, we're all welcome. So it's we're embracing a really open, I would say, approach to all the international participation.
How will the AIIB differ in its mandate and in its lending strategy from the New Development Bank, the so-called BRICS Bank that Brazil, Russia, India, China, and South Africa founded last year? And the headquarters will be in Shanghai. There will be an Indian executive director. The mandate, how will the mandate be different from, is the Now that the AIIB is being founded, does it make the new development bank irrelevant?
No, I wouldn't think so. Their mandates are different, and you know, AIIB, you know, started with A, that means Asia. So in terms of geographic focus, it's about Asia, in particular China, India, and the rest of Asia in terms of connectivity. And secondly, in terms of so-called like a project focus, it will be a lot more focused on infrastructure, you know, AIIB. So AIIB is pretty unique in that sense, okay? And NDB, given, you know, the participants from, Brazil, South Africa, and Russia, so the mandate is broader. And as Mr. Kamal, right? That's right. Has been, nominated as the president,
that's right,
of the NDB. So it will be a lot more, globalized in many ways. So the focus will be more global. It will probably not be limited to just to infrastructure only. Okay, so there will be a lot of other things.
Right, other kinds of projects.
Yeah.
Right. So you feel that the world is big enough for both the NDB and the AIIB?
Absolutely. There's a lot of estimates. Various research institutions have done some calculation. For example, for infrastructure financing alone, the current say multilateral institutions cannot meet the demand for infrastructure investments. Right. Okay, right. I think some people say, well, it's about only 40% of the so-called infrastructure investment needs have been met. Yeah. I think probably it's even lower. Yeah, it's even less.
Right. Now, we don't have too much of time, but in the last couple of minutes that we do have, I would like to ask you a little bit about the role of the renminbi as a possible international reserve currency. I know this is an area that you track in your International Monetary Institute. Tell us something about the Chinese government's attitude towards this, and how do you see it as a finance man? Do you believe the RMB will increasingly play a more prominent role in the international financial system?
I think directionally, yes. And since China has announced the so-called renminbi internationalization initiative, Chinese currency has been gaining so-called popularity in terms of trade, in terms of trade settlement, in terms of foreign direct investments, and in terms of reserve as a reserve currency. There are quite a number of countries already
that are holding RMB as reserves.
Reserves, including the UK. Okay, right. Including UK.
Yeah, I suppose any country that engages in a high volume of trade with China, and that's every country in the world.
Yeah,
has an interest in this. But is there a downside? Is there a downside to the RMB occupying that kind of role?
Of course, there is a downside. For example, from a Chinese perspective, we're going to probably sacrifice a bit in terms of the monetary, autonomy or independence, because the monetary policy would actually be a bit more, affected by global dynamics instead of just the pure domestic things.
And given that historically, the growth and role of reserve currencies have closely tracked or followed the global distribution of power. I suppose it's only logical that as the Chinese economy grows and as China becomes a more important world power, that the RMB too would have that kind of role. Are you looking at some stage the RMB competing with or perhaps even displacing the dollar, or is that an issue that you don't think is necessary or important?
I think in the foreseeable future, we don't see that happening. That means displacing, say, US dollar. Right. But I think Chinese yuan is going to play an increasingly important supplementary role to the current international monetary system. As you mentioned earlier, the current international financial system, financial architecture is not balanced, is not democratized, it's not actually serving the broader needs of the countries. So the Chinese currency, as a currency of the second largest economy in the world, so we have almost an obligation to do something more than what we have been doing in the past.
So for the foreseeable future, China will continue to hold vast amounts of dollars and US T-bills?
Well, right now, we got the largest so-called reserve, which is a nice problem to have. Okay, and but look at the rest of global markets. What's the alternative for you to put such a big amount of money? Right. So again, that probably tells the imbalance or lack of balance in terms of global financial markets. It's predominantly dollar. There's not viable or enough good alternative yet. Okay.
On that note, Professor Ben, we will have to close this discussion. Thank you so much for joining us on Rajya Sabha TV.
Thank you, Siddharth.
And keep watching RSTV, and of course we'll be back again next week with another guest on Indian Standard Time. Thank you.